everyone. Today is a very special day, and we are super excited to welcome a $120 billion asset under management pension fund called OMERS Pension Fund. The Ontario Municipal Employees Retirement System, OMERS, is a Canadian public pension fund headquartered in Toronto, Ontario. In 2010, this fund also takes care of the pensions of firefighters, police officers, emergency physicians, employees of the Children's Aid Society, school employees other than the teachers, public transport employees, and Ontario Hydro employees. We are talking to an amazing investor, Teresa Lee. She's a managing director of OMERS Growth Equity. She's going to talk about her own investing journey into the innovative world of healthcare industry. Welcome to SheVC. I'm your founder and host, Gayatri Sarkar. Absolutely. Thank you so much for coming here, Teresa. I'm just honored to have you because you have such a strong breadth of experience, and especially your own personal journey of coming into this space. So tell me a little bit about what made you excited about choosing this career and how it all happened.
It's funny. You pose it as sort of a choosing of the career, and I suppose at some point that was the case, but all things sort of leading up into that point felt less of a choice, except for the fact that I knew that I wanted to do something where it would make a difference. I'm the child of immigrant parents, and I grew up in a place called Edmonton. I'm not sure that many people probably know where that is, but it's the capital city of Alberta, which is one of the provinces here. I was born in Canada, but had a very traditional, I suppose, upbringing with immigrant parents who happened to be small business entrepreneurs as well. So there was a lot of influence from that, and ultimately guided to a place where, from their perspective, and I very much appreciate and grateful for their advice and guidance of finding a career that is going to be stable and provides for your well-being. But at the same time, I think what I found I needed to do was also scratch the intellectual curiosity itch. And the path that I was set on ultimately led me to here, which is where I get to actually do that part of scratching the intellectual curiosity itch in a space that I'm very passionate about, and I can actually do some impact with the seat that I'm in, because I wasn't guided towards a different seat of, say, being actual healthcare provider or something of that vein. So it's been great to be able to sit in this seat and have this responsibility and this privilege, frankly.
No, absolutely. I'm just excited that you are part of this amazing platform where you're creating these innovative changes and investing in these amazing companies at a very growth stage. So tell us a little bit about your investment thesis and how it shaped, down the road with such a broader mandate that OMERS can invest.
Yeah, so the thesis really, first and foremost, we're investing for the pensioners and having to make sure that they have their financial security in their retirement. And within that, there's a lot of breadth of where OMERS invests. So, I sit in growth equity, which is a piece of our private equity allocation, but across the board, we of course also invest in the asset classes you would expect a pension fund to have exposure to. So, infrastructure, real estate. There's other parts of the organization, public equities, fixed income, but where we sit in private equity, it's an opportunity to actually get really engaged with the companies that we support. And unlike a lot of other pension plan peers, we actually have a very engaged direct investment program. So, back when I first joined, we were very much more like our other peers in industry, where we would have a large allocation towards committing to GP funds. Back in 2008, we stopped committing where we could actually do it ourselves, and that being the geographies of North America and Western Europe. And when we did that, we developed our own teams and really took a look at the success or the recipes for success that we saw some of the GPs have, and started to develop that in-house capability ourselves. And post that point, have been deploying capital directly. And so today we have a portfolio of buyout companies that we own and control. And then we also have our venture arm, as well as where I sit today in growth. And that's all to provide for a continuum of capital where we can partner across stage of business. And where I get to focus my time today, over the last few years now, has been in that growth stage healthcare sliver of the universe, which I personally find the most affinity towards. And so the thesis there really is, from a principal's perspective, I think investing in healthcare can mean a lot of different things to a lot of different people. But for me, pulling together where I've spent the most time, that also is in conjunction with sort of where some of my peers, whether it's in venture or in buyout, spend their time, we've been able to carve out a spot where, from a principal perspective, I'm really looking for companies that are truly changing the way that healthcare is delivered, and really getting them to a place where you have the three wins that everybody always talks about, right? Like where your providers are better off because they're less burnt out because of the service or the technology that you provide. Your patients are actually getting better access and better quality care, and your payers are actually feeling like they're getting some true value for the dollars that they're paying, given the costs are always up and to the right. So I think from a principal perspective, when we really line that up with where our sector expertise has been developed over time, who we're investing on behalf of, what would make them proud to put their pension dollars behind, the people that choose professions where they're running into fires very literally, and then make that, from a principal perspective, decision. It helps us cut through, and it's also very much in line with the principle that when you're doing the right things and you're solving the right problems and you're delivering a real value proposition, the money follows. And so I think that helps to give us the focus that gets us to the places we should be.
No, that's very interesting and unique, considering such a large pension fund made the decision to go direct, where they can actually see how their investments are making the most impact in the world to make it a better place, and obviously with better returns. Now, that's the OMER perspective. I would love to know your perspective, because you also have your own personal journey that shaped your outlook towards investing in healthcare. Would love to know about that.
Yeah, so it's, I'm probably not dissimilar to a lot of people that have had to interact with healthcare ecosystems. I have 3 children, one who is special needs, and has a lot of, I guess, unique kind of care requirements. And then, I would say as well that my own personal journey and interaction with the healthcare system, and shortly after my second was born, my grandfather was diagnosed with cancer, and I was primary to helping him navigate that journey. And in that, saw a lot of the challenges I think that, various sides of the stakeholders face. I came across physicians that were so overworked that they frankly lacked compassion at the time that they were delivering point of care. And it's not hard to understand where you have people working 12-hour shifts as a matter of course, and in that kind of mentally draining interaction on a day-to-day basis, it's really hard. And so seeing all those different angles, seeing how complex it is just from a delivery perspective and how they're able to engage, and then also how it can be kind of thankless. One of my closest friends that I've known my whole life, she's a physician, and to hear her talk about the challenges despite the best of intentions is really it's really motivating in terms of trying to drive towards some sort of change that can be sustainable and scalable. And so some of these aspects are definitely influential in the way that I think about things. And I also happened to lose my mother suddenly towards the end of 2019, and that was a part of the equation that I think post has been very influential as well. Just sort of understanding the deeper aspects of mental health, watching my father navigate a world where he's on his own and growing older and what the needs are there, and that all those things that play into it, right? The dynamics of being that generation where you're kind of caring for your children but caring for the elderly. So there's a lot in there to unpack, but it's not dissimilar to what everybody else sort of has to navigate as well. But I get the privilege of seeing and supporting some of the companies that can address that.
No, I totally agree with you. I think there's this personal journey brings so much of your effort towards, professional life, that, what you can do towards bringing the real changes. 95% of your time, you focus on healthcare. So as an expert, tell us, like, what do you see and where do you see the next alpha and impact that is coming in healthcare?
Yeah, so I think the exciting thing for me when I moved from buyout to growth was to get a more front row seat to the changes from an innovation perspective. I think it's no secret that healthcare has always been a bit of a laggard as it relates to technology adoption. I think and I think maybe the judicial system are the only two that still heavily rely on fax machines, which I just struggle to understand, but it happens to be true. And so, I think there's a lot of real reasons why it continues to be a laggard. There's a lot of high stakes, a lot of entrenched workflows, very convoluted. But I think the exciting thing about being able to move more into that growth stage is getting closer to the innovation that's happening and helping to support those companies that are driving towards getting that change and adoption, and with the main goal of getting behavioral adoption. And that's behavioral adoption in terms of how patients consume their healthcare, how physicians deliver that healthcare, how payers can actually pay for it, and align the way they pay for it with driving towards behavioral change. It's been so interesting to see just the focus and shift towards prevention. And I think there's real dollars and real mind share towards how you can break down the silos of where these budgets and dollars come from that are all kind of addressing the same needs, but in the current constructs have a lot more obstacle in doing that. Just thinking about, as an example, talking about where food is such a key thing for a person's health, and how do you maybe take some of those healthcare budgets that might have otherwise gone to prescriptions and shift that narrative to how can I ensure that people have food security and healthy food security, and what budget does that come from? Does it come from social services? Does it come from healthcare? Because the goal is the same.
Yeah.
And so it's interesting to see how that has played out or is playing out as it relates to attracting, investment dollars to address. And there's a lot of concerted effort and a lot of really smart people trying to address these challenges. And it's going to take a long time, but of course it's worth doing. And I think that's where the alpha is going to come from, is to, once you can get tipping points of behavior change, that's where it is. But there's also at the same time a lot of noise as to a period of time where, we always expected the demand for healthcare services to go up. And at the same time, given COVID, I think the contraction in supply has been even faster than, without COVID having happened, what it might have been. And so it was always going to be a challenge. And I think it's just exacerbated. So I think there is a fair amount of alpha in technology to help drive that, just given the exasperation of the issue.
Now, since we started talking about COVID and you're an expert, I would love to know, because as you're talking about adoptive healthcare changes and the tipping point, both of them came together literally during COVID, and it's a huge shift in healthcare system. So are we going to go back to what it was normal, or are we seeing a major change that's going to continue and push the healthcare system towards like very innovative platforms and products?
Yeah, it's interesting because I think there's certainly, from a healthcare delivery perspective, I think we got a flavor of how fast things can change if we really need them to change. And I won't say that, things didn't break along the way. I think certainly things were strained beyond, the point of just bend and did break. But there are places where we can move faster. And I think there are definitely places where there's a big spotlight on what the challenges are and the urgency that we should have in addressing them. And I don't think we're there yet. It's not a 0 or 1, or in that very high level analysis of what's best for patient delivery and what's best for the value you get for the dollars you spend. I don't think it's a yes or no. I think there probably needs to be more thought in that. And unfortunately, I think we're kind of flipping right back because that's what we know. It's the, this is the way we used to do it. This is the way we're doing it in COVID. And the easy thing is we know how to do right back to where we were, but is that the right thing to do? So I think there's more work to be done as to what sticks and what probably should evolve even further at a faster rate. And then some things that maybe should go back to the way they were. But I think there's a lot of opportunity for us to test these things. And we've already started in that test. So I would hope that we don't lose some of that momentum and instead can build in addition to the things that we've been able to forge forward on. I think a lot of people didn't think that, virtual adoption would head in the way that it did. And I think there's a real reason for a lot of it to be back in person, absolutely. But to lose that option when it makes sense, as an example, is probably suboptimal.
No, I totally agree with you. And since you are talking about the tech-enabled service in healthcare, can you talk a little bit about the different types of healthcare opportunities that you see and how the market is also going to change in those areas? I mean, globally.
Yeah, so happy to. So I will make the distinction that for me, healthcare is tech-enabled services and straight software as it relates to the healthcare ecosystem. So I am not deep in life sciences or med devices, and I know there's a lot of interesting things happening in those spheres that I don't touch. But as it relates to the services and what's going on and the opportunities there, I think there has been a lot of push and a lot of positive change as it relates to mental health. This is not new to anybody. It's if you had asked me 5 years ago whether society could embrace mental health so swiftly, I would have definitely had my apprehensions for sure, because it was so taboo. Just thinking about what we take as a matter of, of course, mental health is real. I think back then, I wasn't so sure that people were ready to embrace that it's to this scale. So there's opportunities certainly there. I think, from an investment perspective, there's other dynamics as to whether or not it's still a good place to invest at this stage. But I think the opportunities will continue to surface as that evolves. Another spot that we're focused a lot on is in value-based care, and in the specific spots where there is a streamline or a shift of the value equation to remove the friction and take the dollars that are currently spent in, say, healthcare administration to actually going back to care. So, actually having incentives that align physicians and supports to those physicians to be able to deliver care in a more holistic and integrated way, so that it's not I do more, I get more. It's I do the right things and I get the right outcomes and I get more. And that, I think, is a very important and frankly present incentive alignment in just so many other areas. But yet in healthcare, it seems like we haven't been able to crack that nut. But I think, I kind of think of it not dissimilarly to how, people in jobs outside of healthcare delivery from a physician perspective, that, when you do a good job, you get a bonus. And that's sort of absent in a lot of ways. It's you do more, you get more, rather than I did a really good job, so I should get more. And I think there's a thread there to continue to push on to get to a better place in terms of efficiency of the dollars that we spend.
No,
Those are
that's
two areas that are kind of top of mind. And then I think the one last one that I will mention that I think is really exciting is just around the data,
yeah,
and not just the data in terms of, you know, the interoperability of it, but really that next stage of like, okay, now what do I do with it? What can I do that changes the way that we consume and deliver care with that data? What can I then start to predict or front run, you know, to better anticipate the needs? And I think that's happening in a lot of the different spots within the healthcare ecosystem, whether that's trying to figure out who's at higher likelihood of developing something that we should, you know, try to address in a more preventative way, through to, you know, what are the resources that we're going to need because of the things, the signals that we're hearing from a public health perspective that we then can then go and make those changes or prepare for in our healthcare delivery facilities, so that, you know, we can be prepared for whatever's coming with real data and knowledge, rather than kind of being
yeah.
caught off guard like we were with COVID.
Yeah, absolutely. And we went from COVID to an upcoming situation where we're now everybody's predicting recession and everybody's preparing for it. So as a direct investor, I have like a twofold question. Do you see more pension funds will be taking approach of going direct rather than going through a GP? And then how do you see this upcoming recession where there will be less and less of dry powder is going to shape up the industry as such, especially in the healthcare area?
Yeah, so on your first point about whether there's more pensions that will go at things directly, I think there is that wind pushing that way. I will say certainly a lot of our, at least our Canadian pension peers, they have their fund program. They also have, you know, co-investment programs, and then increasingly, I think there is the start of direct programs as well. They may be a little different in the way that they approach things today versus where we are, but I do think that there is appetite to go about it directly, more and more so. Some of them already do it, and so I think there's definitely rationale there, and they're, like us, long-term investors. And so there is a reason to, you know, there are some things that are better funded by long-term investors like pension funds versus, you know, funds that have a fund life. It's not dissimilar to how I think about political administrations. There's some things that just take more than one administration to do, and or more than one fund life to do. And so, you know, having a cap table and capital partners that can partner with you through those evolutions, especially when you're addressing something like healthcare or something that, you know, is highly regulated and is a really big ship that's going to take a lot to shift, that's going to take time. And so I think it's a good thing for the healthcare ecosystem, and I think it's a good thing for pension plans that are trying to put dollars to work in a way that can be more cost efficient to the pensioners as well. I do think there's always going to be, of course, a place for funds. I mean, that you can't touch every corner, and they have a lot of industry expertise and experts in their ranks. And so, you know, it's great for us to be able to partner with some of these funds as we're looking for opportunities. But it is also, you know, of course, core to our mandate to be able to do it directly as well and be part of the ecosystem that way. And your second question again, remind me.
Yeah, the second question is about how the upcoming recession fear is shaping up the growth investing, especially in healthcare and direct investing. How do you think the changes are going to happen?
It's a good
Especially when
question.
dry
I
powder
think,
is getting reduced and reduced. I mean, I know pension fund has a very different strategy than people like us who are out in the market raising, but you have a consistent type of capital. But are you shrinking, or are you still continuing and backing amazing founders?
yes. So, I mean, definitely open for business. I will say the bar is higher, and you think of it from like a total portfolio perspective, and in matching that with, you know, what the needs are to deliver on the pension promise as the members require. And so if you have an opportunity to get alpha in one avenue versus another, and we're talking also about the magnitude of what's available as well, there's strategic thinking that goes into that, of course. But as it relates to us specifically within growth, there's definitely a higher bar, but the best companies will continue to get funded. And we're seeing that already, I think, in the marketplace. We'll continue to have dry powder to support the companies that we're invested in, and to, back, managers of new companies that have something, a real value proposition that requires capital partnership. We still will, of course, do that, but it's going to be more of an equation of, is that where, as a pension plan, we're best to invest the next additional dollar versus somewhere else in a different asset class, etc. But the program continues to, we're absolutely, open for business. And you'll see, as we continue to go, you'll see us continue to deploy. I think we've always been of the mind that we don't try to time things, but we do what is market at the time that we do them. And so, I think from that perspective, recession or not, I think we're going to continue to do things that make sense in this current environment, and with the longer term lens. So, as to say that, we're not going to be obviously out there deploying capital in ways that you might have seen others do, over the last couple of years. That has, I don't think, we were actually very disciplined in that period of time ourselves.
That's
great.
And
that was, a little bit of, kind of to one of your earlier questions. In behavioral health, it was one of those spots we had been tracking. Virtual delivery, we were tracking pre-COVID, and then valuations went through the roof. And it was really hard to get excited about deploying capital in that environment. Now, from a long-term perspective, and with the lens of what the environment's going to look like over the next little while through a recessionary environment, are those areas still interesting? They might actually become more interesting, because valuations are back to something that can be reasonable with the outlook that we have, versus, not seeing where that value was, or that it was an appropriate valuation. And even in those, more frothy times, I think it's going to be interesting to see where people shake out as we kind of look into what the forecast of operations can be. And I do think it's going to be slower. People are going to have to be more prudent with the capital that they've got. And I think that'll make for better businesses, better managers, and better value propositions. I think people are going to, I do think there's a discipline in there that is much more sustainable and long lasting. And it's a muscle that I'm unfortunate that we're going to be heading into this environment here, but I think there's definitely good things that come out of it when you have to manage a business through it.
Yeah. One question I wanted to ask, and this is a little bit, out of the script, is like, when you're investing in founders, do you also do follow on, and do you continue till IPO?
Yeah, so absolutely we do. We will definitely do follow-ons. I think it's always easier to have had that existing relationship, and to understand what the strategy is, the DNA of the management team, etc., as you continue to deploy. And so I think that's always definitely a tenet for us of, continue to support the management teams that we're already, invested in, so long as it still continues to make sense. And, we have done that in a number of situations where we've continued to support them through the various series that, are required for getting their initiatives off the ground and continue to grow.
No, that's amazing. And, I cannot believe that I'm coming to the last question, which is, I always ask my guests to talk about work-life balance, because I started SheVC all about, how these amazing women who are literally Wonder Woman in their field, and managing life, managing work, because even if you're the CEO of your company, you're still the CEO at your home. So that is like a job that is, completely thankless, but at the same time can consume a lot of your time and energy. But I would love to know, how do you manage the work-life balance, especially now that we are in such a hybrid environment and sometimes it feels like we are literally living at the workplace.
Yeah, it's a good question. It wasn't probably until COVID that I actually melded the two in my mind. And and I don't know if this is right or wrong, but this is the way that I kind of feel about it, is it's not really work and home, it's just life. And these are the things that I need to get done. And these are the people that depend on me. And there's a hierarchy of prioritization. And so I think of them less like life and work. And I think maybe that's more of a mental construct to help me sort of abate the guilt, maybe a bit. And I think it does help to have a little bit more flexibility. I mean, I'm in the office a few days of the week now. But I do have those extra sort of couple of days where I'm working from home, like today, and you kind of go, okay, these are things I need to get done, and I can be here and be speaking with you, and then 10 minutes later I'd throw the laundry into the dryer or whatever it happens to
Yeah.
be, and it's just like the list of things that needs to get done, and I feel less like I'm trying to juggle one versus the other, which came with a lot of guilt. Now it's just sort of, these are all the things that I need to get done. And I tried to fit them into sort of a more wholesome, like fulsome, I should say, like just it's life. And because it has been harder to sort of draw boundaries. And I don't know if it's more of a mental construct or anything more substantial than that, but it's helped me I kind of get through it without the excess stress of like feeling guilty about one thing or another as it relates to family or even to colleagues. Like, you want to make sure that you're not letting anybody down, and also being able to say no to the things that you need to say no to, or at least say later to those things when you need to, and not end up feeling like I'm failing on all fronts.
No, I totally agree with you. I think the work-life balance have become much better with COVID and having this hybrid situation, and the acceptance of this by people mentally, like, no, we can do this. I'm so thankful, you took the time and, answering those amazing questions. And also, I think a lot of people will now have an idea that OMERS is also investing direct in healthcare system and so many areas, private equity, infrastructure. I'm so glad that we are able to, spend this time together, and excited for all the SheVC viewers to listen to your story.
Oh, thank you so much for having me. It was great to speak with you about all these topics.
Thank you so much. Take care.